Good evening, ladies and gentlemen. I'd like to welcome you all to this webinar. We're about to get started. The name of this webinar is How to Trade Different Expiration Timeframes. My name is M.A. Samuel Motilla, and I will be giving this webinar. So let's just do a quick review. Our last session, we discussed the elements of a successful trading plan. Okay, we review for a quick second last week's webinar. We talked about a trading business model. And very quickly, we discussed the mind management strategy, which puts your emotional flaws in check. When we're trading, we often wrestle with the ideas of greed, with the emotions of greed and fear. So the emotional discipline checklist was to help us keep our emotions in check. That's our mind management strategy. Our money management strategy, which helps us to control our exposure, our risk, and our trading edge, which allowed us to become profitable traders if we have good strategies. So that's what we discussed and covered in last week's webinars. And today we're going to talk about trading across different time frames and different expirations. So I always get the question, what time frame am I trading? What expiration am I trading? And with binary.com, you can trade as low as 2 minutes, okay, all the way up to daily or even yearly if you like. That's what I like about the binary.com platform. It's very flexible in determining which expiration you want to trade. So how do you actually determine the best time frames and the best expirations that are good for your system and your strategy? Okay, it's a question that I often get. So we're going to discuss that. When we talk about trading, there is opportunity in trading. The market can go up, the market can go down, and the market can go sideways. Okay, so how do you actually determine when to get in the market and how long to stay in the market? Okay, each time frame or each expiry has its own different personality, if you will, its own trait, its own set of characteristics, and different time frames offer different opportunities. When we talk about opportunities, we have the opportunity to make money anytime the market is moving. Okay, so volatility or market movement, changes in prices, equals the opportunity to make money. So across different time frames, for example, the 2 minute time frame, we have some volatility across different pairs. Okay, so on a 2 minute time frame, price fluctuations tend to be relatively, stable. More than likely, if you're trading, let's say, currency pairs like the Euro USD, unless there's some major news or some major economic announcement coming out, there's very little volatility across the 2 minute time frame. So when I say little volatility, I mean it's very rare that you get, let's say, 100 pip move within a 2 minute time frame, unless, like I say, there's usually some announcement or some news that's affecting the currency you're trading or the instrument you're trading. But this is what I love about trading binaries, is that if you do decide to trade the 2 minute time frame, the 2 minute expiration, there are actually 24 hours in a day. Okay, so when we break that down, the Forex market is one of those markets that's open 24 hours a day, 5 days a week. So in any one trading day, if you trade 2 minute expirations, you have 720 opportunities to be right. If we say the market is going to go up, the market is going to go down, then we have 720 opportunities to get it right. Okay, and so what you have to love about trading binaries is that the opportunities to make money are always there. Okay, especially when trading currencies, because the currency market is open 24 hours a day. Okay, so I particularly like to trade the currencies, particularly the price the prices, the currencies that have price movements that are pretty volatile. Okay, down to the 2-minute time frame, you can see movements on those currency pairs. And that's what we want to see. We want to see movement. We want to see price volatility, because the more the price moves, the better the opportunity for us to make money. Okay, so moving on to the 5-minute expiries, there are 288 opportunities in a day. So if you have 5-minute bars in a 24-hour period, that means you have 288 opportunities to actually be correct on a trade. So obviously, we're not going to be right on every trade. But if we take 288 possibilities, and there's a chance that it can go up or a chance that it can go down, quite possibly and quite likely, if we have a good strategy, some of those 288 times we can get it right. And that's what we're out for. We're out to get it right. We want to guess and know the correct direction, the correct candlestick color, if it's going to be red, if it's going to be blue. Okay, and that's what binaries are all about. Okay, so let's move on and look at some of the other time frames. I love binaries because to me, it's kind of like the purest way to trade the markets. You know, it's pure, it's simple. You know, like we said, the market can trend up, it can trend down, or sometimes it can be in a range and go sideways. Okay, and binaries to me offer one of the greatest trading opportunities for trading market movements across most instruments. Okay, so when we look at the 15-minute time frame, we have 96 opportunities. Now, obviously, you're not going to be up 24 hours a day trying to trade the markets. What you're going to do is you're going to pick a specific time frame, and you're going to pick a specific expiry time, and you're going to look to make good trades during that time frame and during those periods. Okay, so if we have 96 opportunities in the 24-hour day, doesn't mean that we're going to try to take all 96 opportunities. We're going to try to find the window that gives us the best chance for making profitable trades. Okay, and when we move to the 30-minute time frame, we have 48 opportunities to be correct in a day. So there are a number of different variables that you can use to determine which time frame is best for you. More than likely, your schedule will be the determining factor in most cases. For most of us, trading is a part-time thing. It's something we do to supplement our income. But some of us, we also are full-time traders, and we have more flexibility with our schedules. And so all these things we have to take into consideration. Okay, so moving on, when we look at the 1-hour expiries, there are 24 opportunities in the day to be correct. Okay. And moving on to the 24-hour time frame, trading once per day. Okay, you have 1 day, 7 days a week, or I'm sorry, 5 days a week to get it correct. So to determine the best time frame and the best expiration times for you to trade, you have to consider these factors: the number of opportunities that you have in a day and your schedule, and then the particular currency pairs that you want to trade. Now, what I like to do in my trading is I like to diversify across different time frames. You know, you've heard about diversifying across instruments. Well, that's one way that you can diversify. But there are also, in binaries, there are ways to diversify in a number of ways. Okay, so let's look at the different ways that I like to diversify. Okay, sometimes I use different instruments, meaning I trade different instruments. For example, the Euro USD. And I'll trade the British pound against the New Zealand dollar. Okay, so if I pick my trading time frame, okay, let's say I'm trading, 3 hours out of the day or 4 hours out of the day, I'm in front of my computer screen looking for great opportunities. I might choose these particular currency pairs and look to mix it up a little bit to get, you know, the odds in my favor in terms of winning. Okay, another way I like to diversify across time frames is using the same instrument but trading different expiration times. So for example, I might look to trade the Euro USD, but I might mix it up a little bit. Okay, I'll trade 8 a.m. as my expiration time. Okay, but I might enter one trade at, let's say, 7:30, okay, and then I might enter another trade at 7:50, and so I'll be in two trades or a few trades on the Euro USD, but with different entry points. So I'm kind of diversifying my entry and keeping my expiration time the same across the same instrument. And so depending on what's going on with that particular instrument, that particular currency, that can be a good way to trade. Okay, another way is different instruments, same expiration times. So let's take the Euro CAD and the pound yen. Okay, I might look to get out of both of those trades at 7:40. Okay, I may have a window of 5 minutes, 2 minutes. I may have a window of 30 minutes. Okay, it depends on what's happening with that particular instrument. So what I'm showing is that there's so much flexibility in trading binaries, and that's why I love it so much. The opportunities are infinite to me. So another way is the same instrument, different expiration times. Okay, so that means I might trade the US yen and trade in the US yen, US yen, excuse me. I might get in at 8 o'clock and then it may expire at 8:20. Okay, I'm going for a 20-minute window. And then I might choose to get in a little bit later and make the expiration, let's say 11. Okay, so I'm trading across different expiration times. And so those are different tools that you can add to your toolbox of trading, your trading arsenal, diversifying across time frames. Okay, so moving on, making a specific trading schedule for yourself. How do you do it? Well, often you check what's going on with the currency, with the instrument, any news, any announcements, any economic data, and you looked at trade during those times or maybe not during those times. But if you have a hectic schedule and you're trading, what you may want to do is trade at a specific time each day. And in cases like that, you may want to set your alarm, let's say to trade every day at 9 a.m. So you would set your alarm 9 a.m. and whatever you're doing at any point in the day, you pull out your tablet, you pull out your laptop, and you put in a couple trades based on your strategy. And this is a way to fit trading into a busy schedule. If you're working during the day, this is something that you can do, setting your alarm. I use this often, and so it's a good tool that you can use. Okay, also, choose instruments, trading instruments that match your schedule. Okay, so if you're living in a time zone where you work most of the day and you can trade in the evening, well, you want to choose instruments that give you a good volatility during that time frame, okay, and that give you a good edge in that time frame. Okay, so again, it's up to you to determine what time, what instruments, what expirations. It's up to you to decide all these factors, and it's based on what works out best for you. Okay, and the piece of advice that I give all traders is this: do not force trades. There are so many opportunities in the day that sometimes it's difficult to keep your emotions in check. You get anxious, you get into a state where you may want to take revenge on the market, but oftentimes if you're just patient, many opportunities present themselves throughout the day. So you don't need to rush. You don't need to force trades. Give yourself, a very good a chance of being successful at trading by tempering your emotions, tempering your, let's say, your schedule so that you get the best use of the markets throughout your day. And just keep it in mind that, there are so many opportunities throughout the day that you don't have to rush. You don't have to force trades. Okay, so the Forex market, the currency market, is open 24 hours a day, 5 days a week. So personally, I like to trade during the more volatile times, the London session and the New York session. Okay, actually about 55% of the total volume in the Forex market is traded between these hours. So it's a great time to trade the markets. Okay, from London, which starts at 7 GMT, to the end of New York at 8 p.m. GMT. Okay, a lot of volatility, a lot of opportunities to make money on different currencies throughout this time frame. Okay, so something that you want to look at. Okay, and another tool that I use is to look for movement in the markets using different measures. Okay, one measure that I use, one instrument, or I'm sorry, one indicator that I use is average true range. Average true range gives you a measure of currency pairs volatility throughout a given time frame. Okay, without having to calculate it, you can visually see it at the bottom of your chart as an indicator. Okay, and quite often, when fundamentals come out, news, we expect volatility. So we use average true range and we use fundamental news and announcements to anticipate volatility in the markets. Okay, and when the market is a little bit turbulent and maybe a little too volatile, we know when to hit the brakes. We know when to pause and we know when to re-enter the market. Okay, it's important. Okay, most important as well is sticking to your money management plan. Very important. Stick to your money management plan. Okay, remain disciplined. All right, so here's an example of the pound New Zealand 1 hour chart. And as we can see here, the average true range, I use a 7-period average true range, which gives you the 7-bar range calculated across 7 bars from high to low. And so because this is a 1 hour chart, we can see that throughout different hours of the day, we have more price movement, more volatility, more up and down swings, more range. And so to me, this represents the opportune trading times when we see the average true range peak in the day. Okay, here we have a peak. Here we have a peak. Okay, here we have a peak. To me, these are opportune times to trade. Okay, so again, there are many instruments to trade. There are many indicators that you can use to trade. Okay, and many expirations that you can choose. The point is that with the right set of tools, with the right discipline, and with a good strategy, you can make some good money trading binaries. Okay, so I'd like to thank you all for attending this webinar. If there are any questions, I'll take questions. If not, I'll see you guys for the next webinar. Okay, no questions. All right, so I'd like to thank you all for attending this webinar, and I hope you will continue to attend these webinars. And have a good evening, and I wish you all the best of success in your trading. This is M.A. Samuel Matilla signing off. Have a great evening.